I became chairman of Stemcor on 16th of October 2015, so relatively new into the role. Stemcor, as many in the industry will be aware, has gone through a very difficult period since the beginning of 2013. Where the challenge lay was it had Indian iron ore mines. They probably held on to these too long. Again, as is well known, the price of iron ore collapsed dramatically, and in effect, when the company restructured on 16th of October, it split into two, where you had a core co, which is Stemcor Global Holdings, which I'm the chairman of, and you had RemainCo. And in RemainCo is the Indian assets. The market, again, as is well known, is very difficult, but we are trading profitably. But the key objectives going forward are being the lowest cost in the market all the time. That's the main challenge. You must be low cost. We have a very clear cost reduction plan, and we will implement that over the next 6 to 12 months. Trading is all about the right suppliers, the right customers, and putting the two together. The long-term future is, as it's always been, mixing and matching suppliers and customers. Stemcor, I believe, were always very good at that. They had a very good reputation, and that's the core that we will drive forward over the next 2 to 3 years. The market, in my view, will remain pretty subdued. What we have is very massive oversupply. It's been around for a long time, but it's been exacerbated by Chinese domestic demand going down, where the exports out of China probably peaked in 2015 at around 110 million tons. Most of that has been in Southeast Asia. The amounts coming into Europe have increased very little. But as long as you have that additional 110 million, let's call it, that will create an ongoing oversupply. In Europe itself, a figure quoted, the peak was 200 million demand 2007. Demand today is 160 million. No capacities come out. So in theory, you have around 40 million excess capacity in Europe. Normally in the past, the markets turn, whether it's steel or oil or iron ore, when everyone starts to lose money. That's normally the bottom line, and it picks up. That's not happening this time, because you have, and let's take the iron ore people, they're saying, we will not lose market share. In the past, we have cut back, and all we allowed was the small people to grow bigger. We're not doing it. We're seeing it in oil. We're now seeing it in steel. So in summary, the market will remain a challenge in 2016. I would love to think prices were going to increase in the first quarter, but being a realist, I don't think that is going to happen. I do believe they are at the bottom, because if you look at recent movements through the last quarter of last year, the reductions slowed down dramatically. I think we are trundling along the bottom. I say that because probably everyone's losing money today in steel manufacture, but it's how long do they want to continue taking that pain? Because normally that's what would turn it round. I don't see it going up in quarter one, but I don't see it going down. I think, as I say, we're probably at the bottom at this stage.